Silver's 2026. Shockwave, how deficits, China, and the energy transition could launch prices into triple digits. Silver did not just have a good year in 2025, it experienced a repricing event that may have permanently changed its role in the global financial system. After more than doubling in 12 months and breaking through a decade-long ceiling, attention is now shifting to a far bigger question. What happens in 2026 if structural deficits deepen, China tightens its grip on exports, and industrial demand from solar, EVs, and AI continues to surge? A growing group of analysts now believes this confluence of forces could push silver into triple-digit territory, with the most aggressive forecasts eyeing levels as high as $150–200 per ounce. From 2025 breakout to 2026 setup. By the end of 2025, silver had staged one of its strongest annual performances in modern history, with some analyses pointing to gains of roughly 140% as prices jumped from the high $20 range to well above $60–70 per ounce. This move did not happen in a vacuum. It coincided with falling real interest rates, expectations of multiple central bank rate cuts through 2026, and persistent concerns over fiscal deficits and currency debasement, all of which tend to favor hard assets. Gold's strength provided a tailwind, but silver's performance far outpaced it, underscoring silver's leveraged behavior in precious metal bull phases. The most important part of this story, however, is that the 2025 breakout came on top of a multi-year structural deficit rather than speculative froth. According to data cited by Gold, Silver, and other research outfits, global silver demand has exceeded mine supply for 4 to 5 consecutive years, with annual shortfalls averaging roughly 160–200 million ounces, and some estimates pegging the 2024 gap closer to 500 million ounces when all uses are included. This means that the rally is not built on dreams, it is built on measurable, persistent imbalance. Get free information kits now on silver and precious metals top recommended companies and see our top companies list right now at preciousmetalscentral.com. Don't let this opportunity pass you by. The structural deficit, a 5-year hole that keeps getting deeper. Scottsdale Bullion and Coin notes that silver's supply squeeze isn't a recent development, but the continuation of a long-term trend in which global demand has outpaced mine output year after year. The Silver Institute's data, summarized in several 2025-2026 forecasts, show that demand reached roughly 1.2 billion ounces in 2024, while supply lagged far behind, creating enormous deficits that inventories had to absorb. These deficits are not expected to vanish in 2026. Gold Silver's 2026 outlook emphasizes that demand still exceeds mine supply by on the order of 160–200 million ounces, and UBS has flagged a deficit approaching 300 million ounces for 2025, with similar shortfalls likely this year. On top of this, the Silver Institute and related commentary warn that cumulative shortfalls could exceed 1.5 billion ounces by 2030 if current trajectories continue, underscoring how entrenched the imbalance has become. Nor is there an easy fix on the supply side. Most silver is mined as a byproduct of other metals like lead, zinc, and copper, which means higher silver prices do not automatically incentivize proportional increases in production. Primary silver mines face long permitting timelines, declining ore grades, and rising costs. Scottsdale Bullion and Coin notes that it could take half a decade or longer before supply even begins to catch up, let alone generate a surplus. In practical terms, that locks the market into chronic tightness for the rest of the decade. Industrial demand, solar, EVs, and AI are turning silver into infrastructure. What truly separates this bull phase from earlier cycles is the scale and character of industrial demand. Silver is not just a precious metal, it is the most electrically conductive element, which makes it indispensable for the clean energy transition and the digital economy. The Silver Institute and associated research highlight that solar applications have become a dominant driver. Silver use in photovoltaic PV cells hit a record around 197,230 million ounces in 2024, and industrial reports note that solar's share of industrial silver demand climbed from about 11% in 2014 to nearly 30% by 2024. As governments push aggressive targets, such as the European Union's plan for 700 gigawatts of solar capacity by 2030, this sector alone is expected to consume more than 300 million ounces per year later this decade. Electric vehicles compound the pressure. A detailed 2025 study on silver powering AI, EVs, and the next-generation global economy estimates that EVs use roughly 67–79% more silver than internal combustion vehicles, with each EV requiring 25–50 grams of silver in battery management systems, inverters, and high-performance contacts. The report projects that EVs will overtake gas cars as the primary source of automotive silver demand by around 2027, meaning transport alone will lock in a sizable slice of global silver output. Then comes AI and data center infrastructure. Global IT power capacity has risen from under 1 gigawatt in 2000 to nearly 50 gigawatts in 2025, a more than 50-fold increase, and each new generation of servers, networking hardware, and advanced chips adds to silver consumption in high-end electronics. Governments in the US, UK, and China are now classifying data centers as critical infrastructure, which implies further expansion ahead and a largely inelastic need for silver-bearing components. China's 2026 export controls. Silver becomes a strategic material. Just as structural deficits and industrial demand tightened the market, China added a geopolitical shock that many analysts describe as silver's rare earths moment. Starting January 1, 2026, Beijing shifted silver exports to a license-based system, requiring state-approved trading enterprises and one-order, one-approval paperwork for each shipment, mirroring the administrative controls used in rare earth, tungsten, and antimony markets. CNBC reports that China has published a list of only 44 companies authorized to export silver under this framework for 2026-2027, while state-run Securities Times explicitly described the move as elevating silver to strategic material status. A detailed policy review notes that exporters must obtain individual licenses before cargoes can leave the country, giving authorities extensive discretion over who receives metal, at what pace, and under what conditions. Because China dominates refined silver production and acts as a key hub for processing imported concentrates, these controls effectively tighten a global choke point. Rare earth-style rules introduce uncertainty and delay into supply chains, encouraging precautionary stockpiling and pushing more buyers into visible markets such as futures, which tends to amplify price moves and volatility. Analysts warn that this policy shift could materially reduce readily available export volumes at the exact moment when deficits are already deep and industrial users cannot easily cut demand. The 2026 forecasts, from conservative to bold against this backdrop, forecasts for 2026 have been moving steadily higher. UBS, in a January 2026 note, states that silver prices could potentially reach triple-digit levels, at least on a spike basis, as deficits approach 300 million ounces and the market digests China's export regime and looser monetary policy. The bank's base case scenario centers on significantly higher averages than in prior years, but the key takeaway is that a major institution now treats $100 silver as a realistic outcome rather than a fringe idea. Gold Silver's lead analyst Alan Hibbard has also taken a notably bullish stance. In a January 2026 forecast, he argues that with the market entering its fifth straight year of deficit, limited new mining projects, and accelerating industrial demand, silver is likely to trade above $100 at some point in 2026. Hibbard further notes that if investor participation returns to levels seen in earlier bull markets, the price could rise by more than $100 from its 2025 closing range, implying targets in the $150–$175 band. Other analysts have joined the triple-digit chorus. A widely circulated Substack piece from the Oregon Group lays out the case for silver hitting $150 in 2026, citing the 120% rally in 2025, a 500 million ounce demand-supply gap in 2024, and the compounding effect of energy transition demand together with looser monetary policy. The report notes that Citigroup expects silver to continue to outperform gold and reach the high $70 range, framing $150 as an upside scenario if investor flows accelerate on top of industrial use. Scottsdale Bullion and Coin, summarizing comments from Larry Lepard and others, states that silver could easily reach $100 per ounce in coming years given the entrenched deficit, and sees mid-$70 prices by mid-2026 as a realistic milestone. Get free information kits now on silver and precious metals' top recommended companies, and see our top companies list right now at preciousmetalcentral.com. Don't miss out on this opportunity.